Guys, I hate to say this, but I got some bad news. Despite this run up, this little rally that we've had, there are still just some absolutely terrible stocks out there to buy, and unfortunately, most of them are retail favorite type stocks. I know it seems improbable that some of these stocks that were guaranteed 10 baggers or 100x stocks could actually be giant losing investments, but let me let you in on a little secret right now. Most of these were actually trash even during their hype run heydays, and I know it's going to make a lot of people mad who are holding on to the fact that, it basically had nothing more than a PowerPoint that told them it was going to be the next game-changing whatever, and it's just Wall Street holding them down because they just don't understand the opportunity that's in front of them, despite the fact the only opportunity is actually a PowerPoint. So let's discuss reality today and talk through each one of these stocks. And I just ask in exchange for you to gently tap that like button and consider subscribing too if you like the truth without the hype and, basically you want to follow a guy that's not going to pump stuff like this to the moon to you guys. And the sale on both the new Essentials membership and a full membership ends this weekend, so that way you can have a group of people that will actually help you avoid these exact stocks and these exact scenarios that we'll talk about today. So for under $1 a day or under 30 cents per day, you can join our group and have access to all that information and all the help that you need in order to avoid those disasters. I mean, seriously, you can't even get a cup of coffee at McDonald's for under $1 nowadays. So, I mean, come on, this is way better than a cup of coffee at McDonald's. And don't even get me started on Starbucks. I can't believe drinks there are like $8 or whatever. I don't know. It's just crazy. Now, to be very clear and upfront with you guys, I am not poking fun at anyone. I'm not trying to say, especially a lot of folks who were new to investing, that kind of got caught up in that hype rally that was, 2020 through basically 2021, kind of almost into 2022 there. I'm not poking fun or making fun of those people or anything else. I totally understand that you're new to investing, you're looking for information, and there was YouTube and CNBC and everybody else pumping everything to the moon, and you didn't know any better, and that's okay. That happens to all of us. And actually, even those of us that know better, and the greatest ever, Warren Buffett, we all make mistakes on stocks. We do not get all of our stock picks right. We all have stocks that are just dogs or trash or whatever the case is. We all make those mistakes. So just understand, that's not what I'm saying at all. I'm not pointing to that. I'm not pointing at you or anybody else. Heck, I bought freaking GE at a time during the financial crisis when basically you could pick any stock in the stock market and you would have made a fortune by now. But unfortunately, I picked a stock like GE that has gone absolutely nowhere. Like I couldn't have picked any worse. That's exactly what I did here. So it's not me, poking fun or saying I never do it or anything else like that. I do it. I'll do it now. I'll do it again in the future. It's one of those things that happen. But I feel like we need to discuss these stocks because they are retail favorites. And I want you to kind of see what I see and kind of avoid some of those mistakes and kind of, hopefully be in the best spot possible in the future with your stock picks. So there's 5 stocks we're going to go through today, and they get kind of juicier and juicier, more and more controversial, and probably going to make people angrier and angrier depending upon those groups of people as we kind of get further in the list there, guys. So stick with me here. It gets juicy as we get towards the bottom there. So stock number 1 would be Carvana. And I know, guys, I know it's one that a lot of folks aren't shocked, but think through this, basically the thesis for the stock here for just a second. We just had the greatest bull run or the greatest run in the history of used cars. I don't see a scenario in the future where we have a global pandemic that shuts down, basically the world, and then we have chip shortage for automakers, and so therefore everybody's forced to buy used cars, and used cars are going up like 10% a month every month. It seemed like forever last year. During that time, Carvana couldn't make money. They were burning money like crazy, and basically were down 98% in stock price last year. Now that's during the greatest bull run in used car history. So please, if somebody can explain it to me, I'd love for it to be explained to me. I don't see it. How you can have the greatest bull market in the history of used cars, and somehow this year and future years, whenever things get back to normal, Carvana's somehow going to make it? I mean, if they couldn't make it when it was the greatest bull run ever, now with interest rates higher, the market's slowing down, and used car prices just going back to normal, where the heck are these magic margins coming from? They're not. And on top of that, the debt loads that Carvana has had to take on in order just to sustain business is basically insurmountable at this point in time. I think you could have, the 2022 pricing last forever and they still couldn't churn a profit during that time. So for me, this is one that I'm absolutely staying away from. I understand some people are going to try to play the bankruptcy bounce or do what they did with Hertz or whatever the heck the case was like that. Those are all just short-term trading games and they're basically speculation games. I don't speculate. I'm a long-term buy and hold investor, and I'm staying far, far away from Carvana stock. So stock number 2 would be Peloton, guys. And I know it was a YouTube favorite. A lot of big YouTubers got on the train for Peloton, and I never understood it. I mean, we're in the middle of a global pandemic and people are flush with a lot of cash. And of course, people are going to, I won't say think they're going to get in shape, but folks are going to be buying things like Pelotons and such. But the moment the world opens up, one, you're going to go back to the gym. You're going to go back to doing the other things that you did. And two, the model was basically based upon you're going to buy this crazy expensive bike and then you're going to continue with this $30 a month subscription or something. I can't remember. Maybe it was 30. Maybe I got that wrong. I apologize if I got that wrong. Anyways, you're going to pay for a subscription of some sort to continue using this Peloton at home moving forward. And that's what all the growth projections and all the growth numbers were based on, was this basic model of, hey, you're going to buy this crazy expensive bike and then you're going to pay for this subscription, over the course of years as you just love the Peloton. You're never going to go out into the world again and bike for real and everything else like that. To me, it just made no sense from the start. This was clearly going to be a pandemic winner, was probably a great trade. If I was more into trading and such, I probably should have traded it because it would have been an awesome trade because the numbers were going to look ridiculously good, for that time frame there. But the long-term thesis just wasn't there. And it didn't matter who was pumping it, who was saying this, the thesis was flawed from the start. So it's a stock I don't see any other option outside of either bankruptcy or they get bought out by somebody and somebody kind of brings them underneath their umbrella to where now they're part of a profitable piece. But in terms of them being able to generate huge profits to justify a higher valuation than where it's at right now, I just don't see it, guys. So it's one that I'm staying completely away from. All right, so now we're going to get into the more controversial parts of the list here. I told you guys it starts to build, and let's just kick it right off here with the first stock that I really made I won't call it an anti-video on, but hey, I'm not buying the hype video on, and I got just destroyed. It was one of my lowest liked videos. Not the lowest liked, we'll get to that one here in just a second, but one of the lowest liked videos. Everybody in the comments just telling me I'm stupid, I have no idea what I'm talking about or whatever, and that stock would be Lucid. Now, I get it, when it ran up from, 15 to 25 to 40, I don't know what it was based on. I just, the market cap just kept climbing, and it was just everybody out there was pumping it, right? I mean, every large, I shouldn't say every large YouTuber, a lot of large YouTubers were out there pumping this stock saying, hey, it's going to 80, it's going to 120, and hey, it could rival Tesla, and it's going to be Tesla and Lucid neck and neck for this, run into the EV future that's going to happen by 2025. All cars are going to be EVs and all this other crazy talk that was happening during that time. And I was just kind of looking at it going, wait a second, it's okay. Let's say it catches Tesla. They haven't produced a single vehicle yet at the time. There's nothing there except for, I don't know, plans. They got a factory. They're trying to get there and delivered a single vehicle yet. How the heck can it start having these, crazy valuations and these crazy market caps as if they're producing, 300,000 vehicles a year, which, by the way, they're still not going to hit that anytime soon today. So for me, when I was looking at that, it just made absolutely no sense. It was pure hype, pure speculation. Reminded me of, I don't know, back in the day, and I mean way back in the day when you used to sit down and the fax machine would come across and there'd be some, penny stock pump and dump scheme that would come across the fax machine there at a bank, and then, they would trade it off real fast and stuff like that. Goofy times back then, but, it was just a hype run for no good reason. It made no sense from a valuation standpoint at all. And we're not even sure, hey, the Saudis are going to have to dump more money into Lucid just to keep them afloat. But yet it was one of those stocks that I got absolutely crushed for saying it wasn't going to the moon, and I don't know why it wasn't obvious. I mean, it seems obvious now, but at the time it was just one of those deals. It was okay. I was willing to take the heat for it, but it made absolutely no sense. I like the idea of Lucid. I like the idea of another, EV maker rising up and kind of having its own niche there in that luxury market and such, which is something that Tesla didn't do as good at as, other brands that, to me, in terms of luxury, do a better job of that, with Tesla fit finish problems and such like that. Great. But to think it has this crazy valuation when they haven't even put out a vehicle yet. And oh, by the way, you got Elon, who's basically the EV master, saying, hey, the hardest thing to do is to actually scale and get there. And Lucid hadn't even started yet. That to me is a problem and something I should be a little bit cautious on, and not being the, pay, a price for a stock, $80, $100, whatever the heck everybody thought it was going to go to. I don't even know what it actually got to before it got to its all-time high. You were basically paying for 10 years worth of growth now, today. It's not a good investment, guys. So that's one I've stayed completely away from there. Again, I hope they succeed, but for right now, I see absolutely no reason to put any money, even speculative, however the heck, whatever word you want to put there. There's no reason for me to put money into that stock at this stage, even as a speculative bet. That's what I meant to say. Even as a speculative bet, because they haven't proven anything yet. They've got to get through scale. They've got to kind of get through this production hell to kind of get to the other side there and basically be able to show that they're a viable business. And it's going to be tough right now to, even if they could scale, to sell because of interest rates being higher. And, we're coming into an economic slowdown of some sort. So, for me, just a lot of those things weren't lining up for Lucid, at this time. So it's a stock that I would stay completely away from now, in my opinion, of course. It's not right for me, not right for my portfolio, not even right for me to speculate on at this time. All right, so we got 2 more stocks to go, but this next one is the one that was my absolutely most disliked video ever on my channel, guys. I mean, I just got destroyed, got crushed. It was just, I don't know. It was a fury like I've never seen before, and in the comments section and such. And that stock would be Bingo. And back then, it was on its penny stock run. It was just on a roll. It was running. It was actually basically almost ready to be delisted. Then it went on a run. And at the time, they had no revenue, nothing beyond a PowerPoint. That was it, a PowerPoint. Thankfully, I'm seeing now that they do have revenue, and that's good news for the stock. But at that time, it had nothing, no revenue. And unfortunately, there are folks who were bought, at, $8, $10, $12, $13 per share for a stock with absolutely no revenue, no nothing outside of a PowerPoint, guys. That is pure speculation at this point. Now, they are finally have some revenue coming in, and that's good news. But let's take a look at that revenue, guys. Their revenue is just over $7 million in the quarter, and their net income was negative $31 million in that same quarter, guys. So right there, that's still not a lot of revenue there. I think there's some YouTubers that make more revenue than this stock does, but yet it has a market cap approaching $400 million on just $7 million of income, guys. I know it's one of those things. I'm a hater. I don't understand it. I got it. Maybe I don't. But the fact remains that that is still overvalued today, even at that price. Now, maybe it will grow into a valuation that makes sense later on. Maybe so. I don't know. It's way too early for anything to be for sure and anything to be beyond speculation. But I don't see it being a $3 billion market cap, much less the $30 billion market cap that was expected or that everybody thought it was going to back in the day there. So again, it's a stock for now that to me, you're speculating, and I'm not interested in making speculative bets right now. And on to the final stock in this group, and the one that obviously has the biggest following and the biggest everything else, and that would be AMC. Now, to be upfront, guys, and to be fair to those AMC shareholders, it's finally kind of hanging around or getting close to fair value for the stock when you actually do a valuation on the stock. It's not there yet. It's getting close to there. But you don't buy AMC to, buy it at fair valuation. People are buying AMC because they think it's going to go from $5 to $100,000 per share in a very short order because of all the short whatever, all that sort of jazz and all that sort of noise that's out there around that stock. That's what you're in that stock for. The problem is that it getting to $100,000 per share is actually impossible. It can't happen, guys. There's not enough money in the entire world. The freaking Fed could not pay that amount of money for the number of shares that are out there for AMC. So it's an impossibility from the start. I think everybody forgets, and I know all the apes and all the folks that are into it are like, oh no, hey, you can do this, and they've got to force that. They can't force anything. All those companies, instead of paying that short, one, they don't have the cash to pay it, so it's impossible. Two, even if they were forced to, they just go, oh, hey, here's bankruptcy. There you go. And I'll open up shop right next door underneath a different name the very next day and pull in more investor money and do the same thing again. That's the reality of this situation. That number was never, theoretically sure. I guess it could be. I don't know. You had to get into a lot of theory and a lot of if-then type stuff in order for that to happen. But the reality, it was never going to happen. It wasn't even going to get close to that sort of stuff. Now, I agree with the movement. I like the fact that they're trying to stick to Wall Street. I like all that sort of stuff. I actually love it. I think it's great. But it kind of got out of control, and it kind of got a lot of people into, oh, hey, I'm going to put $50, $80 into AMC stock, and it's going to go to this $100,000. I'm going to be able to retire next year, or as soon as the government does their job, or as soon as those hedgies pay up, I'm going to be rich. And that wasn't the reality at all. It was actually impossible in the first place. And even just looking at what the company has done since kind of this whole ape movement kind of started, they've basically invested in gold mines and some things like that. And that's not exactly what you want to see from a movie theater chain when you're investing in them, is seeing them invest in gold mines instead of, actually what they do and what their business is. So a lot of the moves have been baffling. I'm not sure I understand it. So it's kind of one of those deals, unless you're looking to just kind of gamble or speculate or do something else like that, or it's kind of a fun thing there. It's just not an investment that I'm interested in touching at this time that's right for my portfolio. So hopefully this all made sense and was helpful. And don't forget to get your membership, either the Essentials membership or the full membership to my group before that sale ends this weekend here, guys. I promise there is no better value on the internet for you to become a member of. None of the other groups have nearly as much content, nearly as much value as what we offer in there for the price. So make sure you check it out. It's the pinned comment down below. And click this video here if you want to see the 3 stocks I'm buying now, and click here if you want to see what my exact plan is for the market this year. So thanks for watching, and we'll see you in the next one.